Good morning, everyone. It is Danielle Marie from the One Realty here in Austin, Texas, with your weekly Austin real estate update. So, first and foremost, we are in the thick of things here in Austin as it is the Texas Relays. So, if anyone knows anything about the Texas Relays, it's our 100th year here in Austin, Texas. And this is where we have high school, collegiate, and professional. We've got some Olympians here this weekend. Doing all sorts of track and field events here in Austin, Texas. So it's rather exciting, a different change from our South by Southwest and ACL type events here in Austin. But without further ado, we are going to hop into what has been, I would necessarily say exciting week, but an interesting week nonetheless. So here we go. Also, feel free to like, share, and follow this so you can find this information in the future. Or if you want to reach out in the future about comments, very easy. If you save this, you'll be able to come back and find me. So without further ado, let's talk about the Austin real estate market. So this is what is happening week over week. So week over week, I like to look at Wednesday to Wednesday to see kind of what's changed. Typically because by Wednesday, everything that's gone under contract for the week has gone under contract. And then new listings typically surge on Thursdays. Very strategic as far as when to list your house. So first and foremost, we have seen an increase in the number of listings coming to market. It's not a huge increase, but we still saw an increase. So 26,080 or 680, still about 1,000 under where we were last year, or not last year at this time, but in July of last year when we hit our peak. So interesting enough, we're seeing a little bit more inventory pop on the market as well. You'll see our average price point did go down by 9,000. We're at that 1.2 million. Last year, we were around like 1.3 during the summertime or during like May timeframe. I expect to see it a little bit go up this past week, especially you'll see right here. Our average price for those 7-day listings was at 1.06. So that's what pulled that down. But then again, our median price hopped up here, as well as our median price for the 7-day listings also hopped out. So we saw some, I say, not more affordable houses, but we saw some more houses come on the market at a higher price point, pushing our median up from the bottom level. That also goes back to the fact of we might have those lower houses selling off and moving quicker in Austin. Our days on market pretty much unchanged. Our average went down by 1 day. Our median did not. So kind of swapping houses, new houses coming on the market, as well as old ones going off back and forth. Now, this is the interesting part of the week. So the number of listings with a price reduction. So we went up by 81, where it's kind of expected that we typically see price reductions start to continue to go down as far as overall numbers. This week, we actually shot up by 1.2. With that being said, we did see some more sellers that are kind of maybe antsy to sell the house that dropped their price. So that went up to 42. We're just under 43%. If you look at last week, we were below 42%. As well as the number of new listings. So this is the other interesting is, yes, we have more listings hitting the market, but we actually had more new listings hit the market last week than we did this week. So you would expect as we, especially because this is the first week after spring break here in Austin, Texas, you would probably have seen, everyone got back last week. You would have seen that there'd be more houses hitting the market. It also might be, hey, everyone came back this week, they're taking a pause, and then next week we'll see it ramp up again. So would not be surprised. And then also our relisted new listings. So these are houses that were previously on the market in the past 90 days that have been relisted coming back onto the market. So you're going to see right here, very few. So some of these houses that we are seeing, yes, there's 355 new listings. However, if they were off the market for more than 90 days, their counter got reset to 0. So you're not going to see this. Now, one other thing, I'm going to kind of add a little bit more information that might help some people out there, especially when you're talking about like price reductions and what's happening in the market. So I'm going to switch between this and one other screen that's going to kind of help us see what's going on. So at the end, if you stay tuned, we will talk about what is the average number of days until we get a price reduction. We're also going to talk about what is the average price reduction. That's going to be at the end when I go through all of, will kind of really help you out, especially if you are listing your house or you have your house currently listed and you kind of want to get a better idea, or if you're a buyer and you're looking to kind of, hey, how can I capitalize on this market? So with that, we're going to go down and we are going to start looking at our pending. Now, our pending is our leading indicators for sales. So it's going to kind of show us what's happening, what is in the works for Austin, Texas. So our pending data, we did go up by 28 new pending as far as our net cumulative. Remember, we have houses that go under contract and sell, and then they go back off the market. So you're going to see that. Also, at any point in time, if you do have questions about this data, my comment section is open and I will be able to monitor the comments as we go through. So we did see that go up by 28. This was kind of the bigger number. So when I say new weekly pendings, I'm really looking at how many houses went pending from Wednesday of last week to Tuesday of this week. So I don't look at Wednesday to Wednesday. I look at Wednesday of last week to Tuesday, because we figure if a house went pending on Tuesday, a lot of times the agents take 24 to 48 hours to input that in. So really when I'm reporting this data on Thursday, we're seeing what's happened. So this past week, we went over 200, or we went to 200. Put it in perspective, since last summer, we've only had one other week that's happened, and that was 2 weeks ago. So 2 weeks ago, we hit 213. This week, we hit 200. Last week was 184. So a little bit more pendings. But what I want to show you too, when we hop in this next section, actually, I'll just do this right now in a second. We're going to look at this pending data, and I kind of want to show you the trends of pending, what's happening now compared to the pending of what happened last year and the year prior, to kind of see, is our market stronger or weaker than last year and the year before. I'm looking at the numbers. Just if you do a tunnel vision right now and look at the numbers, you're going to say, oh my gosh, last year was stronger in regards to the number of sales. However, this year's sales prices are higher. Kind of what's happening, Danielle? What's going between the two of them? And we're gonna talk about that. But before we head off to that part right now, we're going to look right here at this pending prices. So you see our pending prices went up by 12,000, as well as our median price. And that's going to all play a role into when we look at our month over month. And we're looking at, where are we? Are we increasing our prices? Are we decreasing our prices? Especially when some economists are projecting what's going to happen for the year. This is really going to help give us some stability and insight in what is happening. So you can see right here, our average price of pending is at 368. When we drop down below to what's our rolling 30, which I can show you right now, it's at 796. Now, that looks like a big change right there. What we're also going to do is close price to list price, because this is the average list price that's going under contract. This will be a good indicator of what we're going to probably see in the next 30 days as we see our prices go up. As well, the other interesting thing is, now we talked, nothing really happened in our active listings of pendings, but here our average days on market for pendings are 53 and 21. And you can see that is substantially less than our average days on market for active. What you're seeing right here with our median 21. So it means kind of the middle house is going within 3 weeks. So if it's a good listing, it's going to be hopping off even sooner. But what it's saying is, we're not seeing houses sit on the market for as long a time as we did in the fall. This is normal. This is seasonality. You're going to see that. But pay attention, because if a house gets on the market, be ready to make an offer. If a house has been on the market for over 2 weeks, we're going to talk about that too. If you stick around, we're going to talk about close price to list price. We're also going to talk about price reductions when they happen and how to maximize on them. So with that too, the number of listings that had a price reduction of these houses, 35.3%, 36% of those that went pending had a price reduction. And that's a drop down of 1.55%. What I will say about the price reduction is, even if a seller, even if they reduce their price by $100, by 1%. So let's say it was a $700,000 listing and they made it a $693,000 listing. It's 1%, that's $7,000. That is going to show up as a price reduction. And so sometimes we're having price reductions is showing that it can be a couple of different things. One, they need to move the house quickly. So you're going to see dramatic price reductions. Two, they're just trying to generate interest on the house again. And that's because if we actually go to the core of it, and we go to the core of all of the algorithms and systems to see it, anytime there's different things that you can do to make your house go higher up in the algorithm to be seen. One of it's a price reduction. One of them's an open house. One of them's changing the photos, changing verbiage. All of that can kind of help and bring your house higher up onto the market. So that's why when you see price reductions, sometimes it's not as extreme as others, but we're going to pay attention. So with that being said, not surprised that the number of listings with the price reductions that are pending is lower, because you also have brand new listings going under contract immediately. Okay, let's take a look at the sold data. And if you're just following me now, feel free, do me a favor. Actually, if you'll share this out or save this for the future, it'll help other people like yourself to find me, to take kind of a data-driven approach to real estate in the Austin real estate market. So with that being said, we're going to check out our closed data. So closed data, we have closed in the past 30 days, 679 houses. Let me tell you, that is atrocious. If we look at, which I will pull up in a second, I will pull up our monthly data and kind of where Austin, Texas, where do we look for the month and how is that going? In comparison to last year and prior years. And I think it's going to be very, very pivotal in what you look at. So you will see our average sales price did drop down week over week by $11,984. Our median went up just a little bit, but sometimes the average price can drop off because we could have had a big sale that was 35 days ago. So when I reran the numbers today, it drops it off. But that's also why we look at median prices. So the median price is still showing a tick up, but our average price dropped off. Once again, this is very intuitive. We're seeing our days on market go down. We are going to continue to see our days on market. As long as these numbers right here in our pending are lower than these numbers right here, we're going to continue to see days on market drop off as far as for our sales price. Now, this is probably the most important thing, especially when we're looking at offers and stuff. We're looking at close price to list price, original list price, because list price could be after some price reductions. So what we're seeing is, how are houses doing? How are sellers? Are they staying in it? Are they staying it longer? Are they dropping their prices? How much are they negotiating? So close price to list price, the average is going for about 2.5% under current list price. The median is going for 2% under list price. So keep that in mind when you're making an offer. But when you're making an offer, make sure your agent pulls the local data. That's one of the things I'm huge on. If we're going to make an offer, we're going to make an educated offer on the local data, not only on, hey, what's the average, but also what's the lowest that's been accepted. We're going to look at all sorts of information to figure out, hey, what's an offer? Is this neighborhood trending upward? Is it trending downward? To make a decision on the house. Now, close price to original list price. So this is houses that have had, this is all houses, but especially houses that have had price reductions. So you're seeing right here 93.94. So looking at about 6% is the average, and the median is about 4%. So as these narrow between close price to list price and close price to original list price, as they narrow it, it's going to be a couple of things. One, if there's fewer price reductions before it goes pending, you're going to see that narrow. The other thing too is, as sellers have had a price reduction, maybe it was a smaller price reduction. So you're going to kind of see those all. But what we're doing is week over week, this is showing for sellers, hey, they're getting stronger. So our close price to original list price, we went up by 1% for our median. That's a big deal. That's a single percentage, whether it's a $400,000 home, that's $4,000, $1 million home, that's 10 grand right there. It is going up. So we're seeing kind of that price point, go slightly up. With that being said, I always like to say, hey, you always want to keep it in perspective of what is happening monthly. And we're going to look at month over month. And we're going to also look at year over year. So we're going to look at the data of where we are for March. We're almost at the end of the March. Gosh, this month has flown by. The year's flown by. We're almost done with the first quarter. With that, we're going to hear over here to monthly. So monthly, this is March's data for 25. This is March, to orient you, this is March's data for 24. This is from 05 to 24. These are our average, medium, highs, and lows of the number of inventory of sales. So first and foremost, you're going to see, which is expected, that our closed data, it's always going to, we're still, I say, while we're only 4 days until the end of the month, agents and builders and everything, a lot of times they don't close things out for at least a week or two. You'll sometimes see that. So with that, I do expect this number to go up. We're seeing 519. I can tell you, we saw in February, we saw it 538. We have significantly more pendings. I we get close to 600, I would not be surprised you're saying, hey, in that few days, we're going to go over it. I think so, but I think we'll still definitely be significantly less. We are going to be significantly less than 24. And if you look at this is kind of the crazy thing. We will probably have the lowest number of sales for March in the past 2 decades. You're going to see that right here. Like 718 was 2013. So unless something happens and there is a crazy number of sales that are happening that get put in, I can just tell you, because if I'm looking over here and we're looking at our weekly data and we're looking at our pending, so our total pending is 922. And there's definitely, we're not going to necessarily close 200-300 out in the next couple of days. Is it possible? Yes. Actually, I see that. I have a house that's closing out in a few days. So could it happen? Yes. But I have a feeling that we'll be in the high sixes for that. So that's where I think we're going to close out for March. So our numbers, our actual numbers are going down in regards to the number of sales. But as far as our average price sale right here, our average price sale, we're up. Our average, we're at 8,011. So up almost 2% year over year. If we look at, so this is year over year changes. This right here is month over month. So I don't necessarily I don't say it's good to look at month over month, because as we go towards the summer, we should see every month should be stronger than the last one in regards to number of sales and price point, just based on historical. As we go from the summer into the winter, we're going to see it go down. That's also why I like to look at seasonality and look at what happened year over year. So 2 different ways to look at it. So we're seeing, hey, prices year over year were up anywhere from 2 to 3%, depending on if you're looking at the average or the median. Both of them up 15,000. What you are seeing is our days on market is higher. We do expect that. We have seen that. So close price to list price, our sellers giving more or whatnot. I will say what this is dealing with from last year in March. In February of last year, that's when like rates were the lowest and we saw a surge of buyers. It was probably last year in February was our most unexpected busy month, because we saw interest rates drop and people came out early. People have slowly been coming out. They've not been coming out quickly at all in comparison to last year. Now, last year, we kind of saw a pause from buyers in March, which was reported in April. So April sales is where we kind of saw it trickle down in Austin last year. So what we're about to do, the next set of data that we're going to look at is how are we trending in comparison to like number of listings and pendings and all of that. But let's look at like the last 3 years. Let's take a look at that. So with that being said, right here, we're right on to last year if we're looking at the median. The closed price to list price and closed price to original list price, the average, we're slightly under. It's not huge, but it is a slight under from last year. And I think that's just because we had more buyers come out and not as many inventory. Now, if we look at month over month, this is kind of showing the trend that we typically see. So if we even disregard prices, but you're going to see right here, everything's going up about 0.5% to 1% in regards to what people are closing out. So we talk about negotiating areas and negotiating power. You have a lot more negotiating power when it comes to October, November, December, even in January. As we start getting into March, April, May, really it kind of dwindles down until we hit the summer months again. So if you're thinking about buying, it's one of those things that take a look at it now. See what's happening in the market right now for you, and if it makes sense for you when the right house pops up, it's not going to hurt to make an offer. I will expect to see, we are seeing some multiple offers, but nowhere near 2020, 2021 timeframe. So with that, I promised you that we would talk about 2 different things. We're going to talk about price reductions and kind of what they look like. And then I also want to show you, hey, where are we going for the year? How are we lining up from this year compared to last year? So I'm going to remove this screen. I'm going to share another screen. If while I'm doing this, if you will do me a favor, if you will follow or repost this, it will definitely help other people to see the space. So let's go. We are going to, let's see, stop this share, and I am going to share a different screen with you. I love data. If you know me, you are going to see a lot of data. So right here, we have a great database in Austin that talks a lot about statistics. And so all sorts of stuff that we can see. So this right here, I'm looking at just single family homes. I'm looking at just Austin, um, different little snapshot of what is happening. And right now, this is kind of like monthly sales. This is showing you February, which is behind. But what we're going to do, we're going to look at price drops because I think that's always very, very interesting for people. So this is all, remember I said, hey, we're about 43%. This one says 44%. I also pulled my numbers yesterday, so it's pulling from today. So in all of Austin right here, and you can see like the different heat maps and different price points, medium sales. In all of Austin right now, there's that 2686 listing, so a few more listings. There have had price drops. The average price drop is 8%. Now, this is the very interesting thing for Austin. The median days until price drop, the median days is 58 days. That being said, I think sometimes the system, it's what the median house is that's having a price drop. Now, some of them could have had multiple price drops. So it kind of skews it a little bit because I pulled this before and it said like 16 days, but we'll talk about that. So the number of sales in February, once again, it's showing us February's data versus what's current because it always pulls it from the prior month. So the number with a price drop was 267. So average price drop is 8.1%. So that is what we're seeing is the average price drop. Keeping in mind, average is different than median. So you're going to have some houses that have been on the market for a lot of time that are going to have the price drops. And then you're going to see right here, if we're looking at price drop information, and we are looking to see, hey, how many have had a price drop and where are the big areas with the biggest price drops? You're going to see right here in that 400 to 499, that is going to be the one, the active with the price drop has essentially the most quote unquote price drops. Actually, no, sorry. It's the 1.4 million. I actually knew that one too. Our 1.4 million. So if we are in the luxury area, the luxury right now is getting beat up in regards to like what is selling, what's not selling. At the same time, they have the most inventory. Our inventory for luxury is, we're talking well, 14 months plus worth of supply. So if you're in the luxury market, when you're making an offer, that's something to keep in mind. So the percent with the price drop, you can see right here. Here's all the percentage with the price drop. But that's also why I go back to that 404 to 499, 53%. So it has the homes with price drops, but the highest number. So it depends on if you're looking at volume or percentages. Volume is the 1.4 million, but from a percentage perspective, that is going to be that 400 to 499. Now, with that being said, here's the average price drop. Once it is completely expected, especially in that luxury realm when we have so many luxury houses on the market, you're seeing right here our average price drop right here, 12%. So if we are at a 1.4 million, and that's just the house, and we're talking 12%. I mean, that's huge. So we're looking at $158,000. I mean, that's a big drop that we're seeing. The other thing to see with that is the price drop outcomes. This is kind of a really interesting chart that I'll do with some of my clients. So days from the price drop to when they go under contract. This is where I was talking about 16. So this is days until price drop is 58. This is after you make your price drop right here. How many days until it's going under contract? It's about 17 days is what the median is. And so you can see this chart, it's kind of going down. You're going to see the days until price drop is the dark column. You're going to see the number of new under contracts that have had a price drop. You're going to kind of see that right there and kind of where we are going. And if we just take a look at, let's look at March from last year. So March of last year, days from a contract price dropping, it was 13 days. Right now we're at 17 days. So it was moving quicker after price drops last year. The number of contracts with the price drop, where it's 296, whereas this year, 268. So a little bit fewer. This all goes back to the fact that we do not have as many buyers out there. Now, I can go into the weeds. I've got so much data. I love data. We could go into it, but we're not going to. Instead, what we are going to look at, let me see if I'm making sure I'm at the right one. Okay, those are sales by week. And what I'm going to do is we are going to do the um, inventory by week. So a couple of things. So this is kind of when we're saying, hey, where are we from last year to where are we of this year? I'm making sure you guys can all see this. Yes. Okay. So this right here, you're going to see the dark black is this year. The green is 24. And then the like tan is 2023. So you're going to see the new listings. We popped up significantly right here in comparison to last year. This is also when interest rates were going down. Typically you'll see, hey, interest rates are going down and you'll see some push. And so we did see that happen right here. If we were to go back, you could track the interest rates. You can track them going down. What we did see is we're dropping down off. So was that our early rise? Who knows? And you can kind of see where we went above the last 2 years. The question will be is there going to be a bigger week next week? Is it coming? Are we still slowing down? This is also the other interesting thing is this is the number of new contracts by the week. So kind of what I'm tracking, hey, I had 200, they got 199. Our days might be off. They might be doing Wednesday to Wednesday or the full week, kind of the difference. They're also, if something falls out of contract, it's not necessarily showing up here either. So mine is like cumulative, whether it falls off or not, but you can kind of see, hey, we've had this steady progression of new contracts that are happening. Now, we're under where we were in 24, which makes sense because if you look in 24, remember I told you February was really big, which is why our March was bigger. You can see that right here. Look at the green right there. You can see how high we are in February of last year. Now what you see is this is when the interest rates increased in February. Last year was at the end of February and March. You can see it kind of drop off. So the interesting thing was last year in 2024, we kind of hit our peak of number of new contracts was actually last week. So it's going to be very interesting to see if we continue to escalate, that's going to be good for us. And that's kind of what we've seen here. Continual escalation. We dropped down a little bit here. And then we've kind of picked up again. And this is all during those tariff discussions and everything like that that people kind of put a pause on. So if our number of new contracts continue to rise, that's going to be beneficial for us. So you can see here in 2023, kind of your peak in April, which is expected. And you can kind of see that we continuously fall off. Now, let me just check real quick, because if I can add an extra, I don't think I can. No, those are my years. So I was wondering to see if I could put the extra date on it. So the question is, are we going to have a stronger year this year than last year or than 2023? This right here, this data, this new under contracts, that is going to be our huge data point that we're going to want to follow, because this continues to rise and we beat last year's. That's when we're going to kind of see, hey, buyers are coming back. And then this final one, this is days until contract. So this shows you like from when it gets on to when it goes under contract, what are we doing? We saw the dramatic fall. This is normal time of year. And then these next 2 weeks is kind of is also when I say like April is your best time to sell and to list your house. Like take advantage of April. Don't wait until May. Because when you start talking about waiting until May and June, you're going to see it's kind of picking up. Your days on the market, it always picks up. You can see it right here, and you can see it going up. That's why I say, hey, let's do strategic planning of your house. If there's a way to get it on the market, let's get it on the market sooner. With that, I'm going to stop sharing that. So overall insight, we are seeing a continual increase of the number of pendings. We are lower from last year. Last year kind of had a little bit of a surge with interest rates. We are also at a 2-decade low as far as the number of contracts, but at the same time, our prices are continuing to go up. So it's one of those balances. It's like you would think that, hey, if we're not selling all these houses and houses are sitting, are we going to see prices drop down? Well, right now we saw slightly this past week. Next week's really probably gonna roll into that, as well as our sellers just gonna sit and wait. If they've owned their house and they have a 2.5% interest rate, maybe they're just gonna hold it out and wait it another year. So if you have any questions on the Austin real estate market, whether you're buying or selling, or if you're looking for an agent in another market and need help connecting with one, I have a database of agents in other areas. Feel free to reach out. You can reach out at Danielle at theonerealty.com. You can find me on X at the _one_realty.com, or just go to my website at theonerealty.com. You can find me there as well. With that, I hope you have an amazing day, and look forward to catching up with you again next week.